Good evening, class. Welcome to our lesson today. So today, as we have seen on the link, we are going to go through several items. So number one, we're going to check about the principle of compounded annual growth rate. We also check about Excel solvers. And finally, we will discuss the question paper. That is the last sitting, question 21, December 2022. So that is the question we are going to discuss. So, and we'll start with this concept about compounded annual growth rate. If you check from a small booklet I have sent you about financial functions, this function was there under the compound interest, just below the compound interest. So, and when you are running this, you're supposed to have a small exercise that you're going to use. Then you compute the compound annual growth rate. So I'm going to share these worksheets. Then it's just a small worksheet. Then we compute very fast and then proceed to our next discussion. So as we share these worksheets, we say that the compounded annual growth rate is actually an annualized rate of growth, meaning that it's supposed to be computed based on annual, that is on annual basis. We check the number of time in terms of years. So the concept of this is actually generated the values in investment or financial metrics, such as revenue over a specific time or period of time that you use to compound it. So the simple formula is that you take the ending value divided by the beginning value to the power of the number of years, then minus 1. That is the formula. If we have to use the formula, you have the beginning value, the end value, then the t that will represent the number of years. Then you can use this simple formula. That is end value divided by beginning value to the power of 1 divided by number of periods minus 1. So let me share that worksheet. And then we compute together the compounded rate. So just a minute. So I've shared that worksheet. Then another copy, you get it on WhatsApp, that is on the group. So you just download and open the worksheet. The worksheet has two, that workbook has two worksheets. So you select book 2, that is not sheet 2. Click sheet 2, then you compute that function together. So please confirm that you got that worksheet. Okay, perfect. So now, with the worksheet there with you, then again, I'm going to open the worksheet here. Then you can run this together. So you have this data. So this is the worksheet I was referring to. And in that worksheet, just below the investment functions, we had the compound interest, and we had this compounded annual interest rate. And we are told here that we don't have a specific function in Excel that is called compounded annual growth rate, but we can use this function. That is, we can use the function RRI function in Excel to compute the same. So we have seen the function we can use. So we're going to use the two to compute the same. That is, you need, you can confirm your answers using the formula and again using a function in Excel. So let's check how this function works. So that being our workbook, then we want to insert the functions to get the compounded annual growth rate. Our data is here. So our present value or future value, the number of years, we have 5 years. And you want to compute the compounded annual growth rate. So use the formula, then we have compute this function using the formula given here, where we say we start with the end balance. So you click here, say is equal to the ending value, which is this value here. You have to put the bracket, then divide by the beginning value, then to the power of, say, to the power of sheet number 6, to the power of in bracket 1 divided by the duration, the number of years, that is 5 years. Then the whole thing you less 1. So you're using this formula that were given here. So where we say the ending balance, that is the value at the end of the period. The beginning balance, the initial value, at the beginning of the period, then the number of period, that is T, the total number of compounding period. So once you put the formula, you press enter, and it's supposed to give you in percentage. You have to set it in percent. Supposed to give you a specific percent. So you can still do the same using an Excel function. So here you insert that function, just type there RRI. Remember that this function is only available in higher office version like 2013. Like the one I'm using here is 2013. You have to use either 2013 above 2010. Any other office above 2010. So you select the function, then click OK. So the function will ask you to set up. When you're following this function, then the function is just like the formula you have used there, because you have to provide those parameters. The first parameter is the number of periods. You have to present that. You have to present the beginning balance and the ending balance. So in that function, then you set the number of years, the total number of periods, that is 5, the present value, that is the beginning balance and the end balance. Then finally you click OK, and then set this value into percentage, and it will give you the same percent. So that means you can use Excel function, and you can also use that compounded formula. So normally Excel function helps to make your work easier and even more accurate, because when you're using Excel function, then rarely do you make mistakes, because sometimes when typing a formula, you may end up missing either a sign or a bracket. That one gives you a different answer. So that is the first thing we have to discuss today. Probably in some functions you need to use these. So it is important to run that. I hope you have done that computation. Then our next discussion, you were to check on the next thing, discussion about Excel solvers. And I want us to check a little bit about solvers. And you remember, initially we did discuss about goal seek, and I explained what goal seek is all about. We said that this function goal seek is actually a function that helps us to compute the value. Sometimes you can say it can help you know the even value to achieve a specific goal. Like last time we discussed on how you can compute the number of items that are required, or the selling price that you need, so as to attain a specific revenue, and or to attain the revenue or the even point, that is the profit when 0. Then you said that you have to insert the function, and the function we used is goal seek. So the only thing with goal seek is that it's a simple function that can only calculate only one single variable, that is to either help you to check the selling price to meet a specific even. But when you are given multiple, then the goal seek cannot solve that purpose. And there you have to use solvers. And solvers, just like goal seek, is a function in Excel that have to be added. It will not come in the Excel. It has to be customized. And just the same way we did customize the function, then you have to do the same here, that in your Excel program, then under the file then the options tab, then the add-ins. So you have to add in those analysis toolpack, and when add the analysis toolpack, to give you the option of adding the solvers. I hope yours can read the right language. But when you activate the solvers, then the solvers will appear in the data tab. When you click on the data tab, you'll find the solvers. Under data analysis, find the solvers there. So that is one thing you have to do, that is you must make sure that this command solvers is activated. If you check very well, it is actually a what if analysis tool that finds the optimum value of the target cell by changing values in cells, not in a cell, like goal-seek will do. The goal-seek will only solve values in a cell, in one cell, but solvers can change several values. So that is the command solvers, and the first thing you need to do is to make sure that this command is activated. So the data that you're going to use, I'm going to share this data once again. And once you get this data, you download it. It has 3 worksheets. We're only going to solve the first example. Then later, at your free time, you go and solve the 2 more examples given there using the same format. So if get the worksheet, you download that worksheet again, then open the worksheet, sheet 1, that is example 1, that is what we are going to solve. So I have uploaded that worksheet again in WhatsApp. So we are connected to, the machine is connected to WhatsApp. Again, you can download from there. So then after downloading that worksheet, we are going to follow that procedure together. So the worksheet I will just send to you has the question, that is the question that you are going to solve. So what are solvers? In talk of solvers, then you say solvers is one of the most powerful tools in Excel because it will help you find optimal solutions for decisions. That is, you are supposed to make decisions. It belongs to special set of commands referred to as what if analysis tools, and primarily purposed for simulations and optimization of various business and engineering models. So the solvers will have several parameters, and you need to check on these parameters. In Excel, solvers are especially useful in solving linear programming problems. Linear programming, I believe you did linear programming somewhere. And this is the main function of solvers. So while solvers sometimes may not crack very difficult logical questions, but most of these questions can handle things like they can help you maximize the returns of an investment. For example, choose the optimum budget for your advertising campaign, make the best work schedule for your employees, or minimize the delivery cost. So another function you can use. So in different versions of Excel, solvers can be obtained from different locations. If you are using Excel from 2010 onward, that is the latest 365, solvers are found in one option, and you can activate it from file option. But if you're using a lower version, then you'll find solvers in a different point. So you said you click add-ins, then Excel add-ins go, and then you activate the solvers. So I hope you have done that. So, and once you activate the solvers, it is supposed to appear in the data tab. And the data tab, you'll find your solvers and analysis tools. But in other Excel functions, you get it under the tools tab or the tools menu. Then how does this solvers works for us? So an example of a problem that an Excel can solve, like one here we have here. I told you, suppose you are an owner of a beauty shop and you are planning on providing a new service to your client. So that is, you have a new service you want to provide to your client. For this, you need to buy a new equipment that cost for $40,000. So which should be paid by installment within 12 years. So then the goal is to do what? The goal is to calculate the minimum cost per service that would let you pay for the new equipment within a specified time. So you do offer certain services, and the projection of our work, that is that worksheet I've already sent you there. It looks like that. So the problem is to calculate the minimum cost per service. So in this case, we had this, that was the current that we had already. That is $73.5. So you need to know the minimum cost that you let you pay for the new equipment within a specified time frame. So when you're setting up the solutions, then we have to follow the solvers parameters. That with this data, then you're supposed to run the solvers, and you activate the solvers you activate that solvers. So you click on data tab, then you click solvers. I hope you have done that. Click on data tab, then click solvers. Supposed to produce the solvers parameter dialog box. So this solvers parameter, we will have three main parameters that you need to specify. You can see those parameters. The first one is objective. The objective cell is here. We have the variable cell, that is called by changing variable cell, that is a variable cell. And the last part is the constraint cell, that is a constraint value. So what about this? What about these three parameters? We have already seen the three parameters, and the three parameters applies here. When you talk of the objective cell, we are referring to the target cell. That is the cell containing the formula that represent the objective or the goal of the problem, the goal of that problem. That is what these objective cells represent. That is in the worksheet you have sent you. There is that cell that has a formula already. And if you click on that cell, you'll find the formula already there. The formula that you help us to get the number of months to pay the equipment. So you take the cost of the new product, the projected client per month, then the cost per service. And to roughly estimate this one to, I'll give you a value of 12 months. So when you talk of the objective cell, then we are referring to that cell, the cell that contains the formula that represent the goal or the objective. The objective can be maximized, minimized, or achieve the same target. When you are running the goal, the solvers, it is either to maximize or to minimize or to achieve the same target. Like in this computation, our objective was to minimize, because you are told calculate the minimum cost per service. So we are looking on how to minimize that. It was 12 months. How do you minimize that? So in this example, the B7, which calculate the payment term using this formula, and the result of the formula is 12, which you have already found there. That is what you are going to set in our objective. So we just click on the solvers the way we did. Then from there, you click on this set objective and click on the cell that has the formula in which the formula that has the goal. Then from there, when you click there, and here we want to do what? Either to maximize, to minimize, or the value of. The value that you already have here. Which value do we have here? So we already have the value 12. So meaning that in that worksheet of ours, the value of this, the value of that B, you don't want to minimize, you don't want to set maximum, you don't want to set minimum, but you already have that value, which is 12. You just set 12 there, because that is the value we have right now. So our next parameter, we said we have the parameters, is called the variable cell, which here in this dialog box is referred to as a changing variable cell. So what about this changing variable cell? So we are told that the variable cell in the old versions was called the changing cells or the adjustable cells. These are cells that contain the variable data that can be changed to achieve the objective. So that is why we are calling it the changing cell. Excel solver allows specifying up to 20 variable cells. You can have 200 variable cells. That is, you can set a number of them. In this example, we have a couple of cells whose values can be changed in order to achieve our objective. So number one is projected clients per month. Projected clients per month. That should be less than or equal to 50. So that is the projected. So you check on our data, you'll find the projected client per month. We are told here it was 45. But if you read our question, here under the solution, we are told here that the variable cells, we're going to change the two. That is projected client per month. And the other one you change is the cost per service. Those are the two variable cells that you're going to change in our formula. So that means you have to present the two variable cells. So, and presenting the two variable cells, we can do it in two ways. If they're in different locations, you can click one, then put a comma and select the other. But if in the same location like here, can just highlight the two at once because they're in the same location. So these are the two values that we really need to change to achieve our objective. So that is the cells that we need to change. In our solution, we're supposed to change these two cells. And changing these cells will require us to set some constraints. And what are the constraints? So you've seen, what are you doing, madam? You are affecting the screen, please. So the variable cells or the range of cells we have set, these values can be adjusted. However, the next parameter is the Excel solver constraints. These are the restrictions or the limitations of possible solutions to the problem. The possible solutions to the problem. To put it differently, constraints are the condition that must be met. So you have to add these constraints into your worksheet, and you do that so as to achieve your objective, So let's check now. So you've said that you're supposed to add, and we say that these constraints are restriction. You can say the word constraint actually means restrictions. And in this case, you're supposed to set those conditions that must be met by adding them. And we add this on that constraint box that is provided for us. So, and we're going to do that, and the constraint dialog box is the box down here. So, we're going to do that. Go back to our worksheet. We have our worksheet there. This is our constraint, the subject to constraint box. This is where we are supposed to add our two constraints. We have said here that we are going to do to solve. So, and the two constraints, the first constraint is that it was given in our question. If you remember back the question, you go back to our questions, you'll find that the two constraints were given. So how was the two constraints given? So this question was like this. We were told this, that you have this beauty salon. You are planning on providing a new service to your clients. For this, you need to buy a new equipment of this. That is the first constraint, which should be paid by installment within 12 months. So you're supposed now to compute the minimum cost. That is something else you need to solve. The minimum cost that you let you pay the new equipment within that specified time frame, a specified time frame. So that means you are given the two constraints. And now I want to see how to add those constraints, this dialog box. So here, that the sales with that is the cost of the new equipment is given at this. Then the number of projected clients, not patient clients, per month was around this figure. And you're going to set this. So meaning we're supposed to set that by adding those parameters in our subject to constraint list. So how do you do this? We just click add here, and it will give you the constraint. Here, it will ask you to select the cell difference from where our constraint is supposed to be chosen. So the first one is the cost of the new equipment. The cost of the new equipment is in cell B3. And here, you're supposed to choose. And adding this constraint, so is it supposed to be equal to, less than, or equal to? So we say here is supposed to be equal to what? To 40,000. 40,000. That is the first constraint. Once you enter that, then you can click add. So in solvers, if you finish, you don't have another constraint, you just click OK. But we have another constraint, so you click add. Before you click add, then you find that Excel solvers allow specify the following relationship between the cell reference and the constraint. So what are these? We have the less than sign. We have seen less than or equal to. We have greater than or equal to. So you set this relationship by selecting them in that sense. And the other choices you can choose, we have the int for integer. If the reference must be an integer, that is the whole number, then the different value, if each cell, the different value, that is choose from here, we have different value, we have integer, we have binary, and different value. Where the different value, if each cell of the reference range must contain a different value, then you choose that diff. Then binary, if you want to limit the reference cells either to 0 or 1, that is the binary numbers. So in this case, we choose equal to, and we say that our value equals to that. Then we need to add the next parameter. So here you're told that the new equipment cost equals to $40,000. Then to add another constraint, you click add, and to give you the next reference. Here you're supposed to check the number of projected clients per month, and in that number of projected clients per month is in cell B form. Here we say that can be either less than or equal to 50, less than or equal to 50. So we've already given 45, that is still less than 50. So that is the projected number. So then from there, once you do that, you have already set the 2, you click OK to return you back to the solver's parameter dialog box. So here, we have set all the 3 parameters, that is the objective, the variable cells, and we also set the constraints. Then the next thing you're supposed to choose the solver's problem, that is number 3. After you have configured all the parameters, then you're supposed to click solve button. You can see the solve button somewhere here in order to the solver's parameter window to see the screen that will now give you to find the optimum solution for your problem, depending on the model complexity, computer memory, the processor speed. It may take a few minutes or a few seconds, or a few minutes depending on the complexity of your data. But here you have just a few records. It cannot take too long. Then when the solver has finished processing, it will display the solver's results, where you select or keep the solver solution in case you want to keep the solution or restore to the original values. So which you're going to see there. So, and by default, if your solvers, here we have several solving methods. And before I click solve, we have the first method called non-linear, the simplex, linear, and the evolutionary. Remember that we said solvers normally help us to, they are normally useful in linear programming. So the one we have selected, that is general, is called the general, it's referred to as general non-linear. Just a minute. The generalized reduced gradient non-linear algorithm. So this will help us solve problems that are smooth non-linear. That is, non-linear here, it means that you don't have that linear, what is the linear perspective of it. That is one way of solving. The simplex, again, these will help to solve the linear solutions. That is the problem, linear solutions. Evolutionally, again, you solve problems that are they don't have that smooth, that is the linear option. So remember in linear programming, you did the concept of the same. So you don't want to use those. The default is actually what you're going to use to solve our problem. And once you do this, then you click solve. When you click solve, then it's supposed to produce the solver's results. You can see the solver's results, something like this we have here. And in these solver's results, you either keep the solver's solution or you restore back to the original values. In our case, we want to keep the solver's solution because we really want to solve or to compute these. Then in the same dialog box, you'll find you have the save the scenarios in case you want to save these scenarios. Probably in a specific, you have to write the name. Let me call it solution 1. You can solve that solution somewhere in case you want to open it again. To find it, that solution, you can always run it again. So if you click OK, then you said it can take time. So you can see now here the cost per service was set to what? So now we have not changed our values, but we're going to change these values later, and you'll find how mine cannot find a visible solution. So you can try again to change with the different figures, and you'll see how it should adjust your work. So I've not directed my solution somewhere, so meaning that I need to finish up that solution at the end, up to the end value. So we have set the values here. Okay, my solution was already solved. I think the worksheet I have already sent you was already fixed. The values, the original values were different. So I'll give you the original values, then try to solve and come up with the solution. That is, after running the solution, you're supposed to get this number here, and it's supposed to get this value here. So that was after running this, you're supposed to compute and give you the last solution. You click OK, and it should give you the cost projected client supposed to give you this amount here. Then the number of months supposed to give you this amount here. So okay, you forgot to click answer. That was our problem. That is, once you finish up here, you click, so you're supposed to click answer, and then you click. Okay, so supposed to produce another worksheet. When you click answer, then you click okay, supposed to produce another worksheet here. And in that worksheet, it gives you the summary of the solvers you have computed. So, and gives you this, the summary of what you have done. Solution it has computed. So remember that our data was already computed. The projected value was this. Initially we had this. Then this was the amount, 12 months. Then not bid. So it was already computed. Let me change this to original data, and then you can run it again and find how this solution will give. Remember that it's supposed to adjust those values. So let me upload that original data, then you run it again. Or you can change the values. Just change the values manually. Change those values manually. Here, the amount, the original amount was 550. And here, the amount was, sorry, the amount was, just a minute. Yeah, the amount was 66.67. 66.67. And now you can run again. So I've seen the problem where our data was. So you can already give you the computed data. So just change the values. So here, whatever was not provided, the values we are provided with the original data were supposed to have different values. So that is, these two values were okay. We were given this amount and the projected number of clients were actually given as 45. And the cost per service was given as 1%. The number of months or the number of months to pay the equipment was given as a formula. This was just a formula. So that is what was provided. So now from that data is where we were supposed to get the values we had there were actually the answers. So meaning that you can change your values. The only value you're supposed to change is cost per, the cost per service. That is the two values that are changing. The projected client per month and the cost per service. The two values that were changing, that is what you are told they are supposed to change to what? They're supposed to change to these two here. These are the constraints. So because you check on the constraints, that is what you are to provide. You are to provide this amount here. And again, you're supposed to set the objective. The objective, the first cell above here, is supposed to set the objective to 12. So that simply means that we want to limit our value all the way to 12 months using these constraints, and we want to see whether we can achieve that. So to achieve this, to achieve 12, you must set these constraints here. We are supposed to set these numbers. You're supposed to change these two numbers. The numbers representing projected client per month and the cost per service. So once you do this, then you click solve. Then you're supposed to change the values immediately. Before you even click OK, the values are supposed to change immediately. So once you do this, then you click OK, and it's supposed to produce a summary finally. So we've already produced a summary, and I deleted it, so you can run it again to get that summary. So that is running the servers. For example 3 and example 2, again, the solutions were already given. So I'll send you another copy with now the original data set. Then you can run that servers again. So that one will be the first assignment to perform the next 2 examples. But you wait, I will send you that original data in the WhatsApp group. Then our next discussion today, we are supposed to check on the question. That is the first question in the last sitting paper. And I hope you have that worksheet. So you have the worksheet, you open the worksheet, then you go through that question. That is December 2022, question 21. So if you have been following these classes from the beginning, in our discussion, we did solve some of these problems when we were discussing about integration and when we are discussing about the cash flow. And someone was asking about the videos of the cash flow. I don't know why they are even insisting cash flow will never change. The format of your cash flow remains the same. So even having the video does not mean that you will change anything. What you need to know is the format. First, you have to master that format, and you know how to extract your values to your cash flow. So nothing else is changing. The question will be set to compute the cash flow for a given year. So you have to know how to extract your data. So this question we did together, and the videos, if you want to access the videos, we only did one, so you don't think we did this one for 2022 and the other one for pilot paper. So you don't have any other extra videos. So if you're asking for the video, you should get only those two videos. I think one video for pilot paper, I think it got, there is one that is not yet traced, but it is somewhere. So for those who are asking the video, that is why the video is not yet presented there. Not because anyone really wants to, not to deny you the video. The video for tax were done by Lawrence. So I really check whether those videos, and I think some of them were sent there. So you'll check whether they are there, but once you get you'll get that link. So, but for the cash flow, the review, we'll do one review before we do our exam. We'll still do like 1 or 2 reviews again, so that you get the format and you understand that format. The question about the NPVs, we also solved this question together, remember? And again, this is something that is not changing, it will not change. And you are still asking the taxation videos, people, you are not serious. I'm telling you that the videos were actually taken by Lawrence. So, and they are going to compile them together and you're going to get them. But remember, see, the concept of tax will not really change. That once you remember or recall the format, then you still get that video there. So in our last discussion, we did this question. That is question 22. So we said the question was a bit complex, but we actually obtained that cash flow. That is the cash flow, which you are supposed to compute the net present value. That is to know whether this specific person could go ahead and introduce that new gadget to the firm. So that means the only question you have not covered is this question here. That way we have to go through it. So one thing you should know, that exam is all about one, following the instructions. Then number 2 is actually working smart. So in that examination paper, once you download the worksheet, you don't just start question 21 because it is the next question after the theory. So you have to go through all the questions provided in the worksheet. Go through all the questions. You can even read through, see whether that question is doable first. And then again, check if it is doable, check whether it has a lot of working. Because here we have 2 forms of questions. Some questions that are very easy to perform, they are very easy to compute, but they have a lot of working. So that will require a lot of time. Then check the questions. There are questions that are very easy. So you have to check the question that you can finish with first the minimum time possible. It is not a must that you must choose the first 3. You can even do the last one or the last three, or even one here, the other one here. But just read the question through and see whether the question has a lot of working. Like this question, yeah, I really kept this question pending because that was one of the reasons why question had a lot of working, a lot of working. That is something you could not just finish within like 30 minutes. You're supposed at least take 40 minutes, 30 minutes in every, or less than that, every question. So if the question really take more of your time, then simply it means you not be able to attempt the other questions. So you have to be smart on that. And since you have gone through the concepts, different concepts in your levels, that is intermediate and advanced, you already know some of the concepts that are very easy to do, tasks that are very easy to do. So from there, you'll be able to evaluate which question to start with first. So that is what you're supposed to do first, to master first. Huh? So, and then once you get the question, it's always better to first comprehend that question. Some question you see like, just click on the question, you find, oh, this is just cash flow. That is cash flow. You will start computing the cash flow. You have not even read anything here. You know the type of cash flow you're supposed to make, the years. It is important to check through. Just check through. Check even the items, the statement itself you are given, and then read the additional information. Always read the additional information. That is something else. You should not just start the question without reading the additional information. So that is something else that is very important. So this question you're not going to finish it because I've said it has a lot of working that need to be done. So I'm going to send this question in the group probably tomorrow morning. Then you can compare your result. First you do it and then you send your working. But before you send your working, I've already sent you my working. Then you can compare with yours. Then check whether you'll get the same result. So here you are given this an extract of statement of profit and loss. That is the statement provided here is for these 4 years from 2019 2022. Then these are the items that are given. You know the items given in an income statement: revenue, cost of sales, the gross profit, operating expenses, and depreciation and profit before interest and tax. And you are given for those 4 years. The note is required. Part number A was not that much involving. It's only required you to understand the equation. You are supposed to calculate and interpret the ratios, the following ratios. So remember that you have to leave a space for interpretation. So that is after you compute this. What is this? You're supposed to leave a space for interpretation. You said that it's always important to do your questions down there. There are some workings, you can just do them above here. Because it is easy to reach. Probably it will be required to solve the other questions. So and just do it from here. Let me transfer these ones. Transfer them here. Let me transfer them in here. So and I have those workings there. So the first thing you're supposed to compute, you're told there in our question, is the annual growth rate, annual revenue growth rate, the annual revenue growth rate for the years 2020 to 2022, 2020, 2021 up to 2022. So that is the annual revenue growth rate. So that is just checking on the growth rate. If you check here, you realize that there's a growth. You can actually see that for this. You can see there is growth. You can see this amount to this amount is a growth, but they are not asking for that growth. They're actually asking for the rate, the growth rate. Huh? The same case here and the same case here. So to get that, then you can use that simple formula. You can pick this amount less this amount, then you divide by the original, that is the base amount, that is 2019. So then you can have your formula above there. And the formula, just like we have said, you say equals to the revenue for, we are looking for the annual revenue growth rate for 2020. So you have to start by setting up those 3 years. And from there, you take the revenue for 20, sorry, you start with the brackets. The revenue for 2020 less the revenue for 2019, then divide by the revenue of the base year. So from there, you press enter. The value probably will come without the without this percentage to be just a number like this one. Then you have to convert it to percentage. So you don't multiply by 100. We said just convert it to percentage. So, and since the formula is actually referring to these cells, 2 cells here, then it means that formula can run the reference across the screen. So whereby this formula will refer to the year 2021, 2020, then divide by 2020. And then finally you have the last one that you refer to 2022, 2021, divided by 2021. So, and you'll get those 3 revenue growth rate for those 3. Remember that the question was asking to do what? To calculate and interpret this. To interpret here, what can you say here? So you're saying that there is an increase in revenue for 2020, 2021, then further a decrease in 2022. So what is this decrease we are referring to? Not that in our data that the revenue actually decreased in 2021, 2020, 2021, 2022. You can actually see that it is growing throughout, but the rate of growth between 2020 and 2021 was higher than the rate of growth between 2021 and 2022. So that is the interpretation you're supposed to give, that the rate of growth actually decreased, maybe because of some factors that could be interpreted down here in our profit and loss. Maybe certain factors that could be interpreted down here. But that rate of growth decreased. Sometimes you can even say it decreased by how much? From 2025 to 18, it decreased by how many percentage? You can check. It decreased by, yeah, by 7%. So that is the interpretation of that. So, and the first solution to that question, so that's why I was saying that you need to leave a space for interpretation. You need to leave a space for interpretation of your work, so that you need to write that interpretation here. That according to whatever you have got here, the rate of growth between 2020 and 2025, 2021 was higher than the rate of growth between 2021 and 2022. That is, from 2021 to 2022, it decreased by 7%. Then the next question, you're supposed to calculate 3-year cumulative average growth rate. 3 years cumulative average growth rate for the year 2022. So to compute this, then you are supposed to check cumulative. And remember that this is not compounded, so you don't use the formula for compounded, the one you are using there. Just cumulative means you're supposed to get the average of these 3 and you compute here. So the average of the 3, you can use a simple function, average, just like we have used here. So just say the average of the 3 and to give you an average. Actually, as in average in 2022, this was the growth rate. That is, it was the growth rate. You want to know that the growth rate in average for the 3 years, then it was like that. So someone is asking whether we should do. No, we don't do that because this is not compounded. It's not compounded. If you use compounded, you get a different rate, because if it was compounded, it means you do what? You use that function I showed you there, and the function will give you a different answer. Because we have how many years? We have 3 years. Then the starting value, we are starting from 2020. 2020. 2020 or 2021. We are starting from 2020, then 2022. So, and you'll get a different value. If you convert this one to percentage, it gives you 13%. See, that is a different value. So that is not what they are asking here. They're actually asking the cumulative. That is the average of the two. So we don't use that. In case they ask compounded, then you can use this function here. So that was the next question. Then the last question you are given under Roman A is the effective tax rate. Again, you're supposed to interpret that the 3-year cumulative for 2020, that is on average. That is the interpretation that on average, the growth rate for the 3 years, that is on 2022, the growth rate on average was attributed to, that is, this was the growth rate as per this year 2020. Meaning that if you are to project, we are to do projection for other years, that is forecasting other years, then you have to use that 21%. That is the cumulative average growth rate of 2022. So that is what you use to project the next year. So that is the cumulative. Yeah. So then the effective tax rate for the period, for the period 2019 to 2022. So here, to get the tax rate, the tax rate, how do you get the tax rate? So here, we have the tax here. If you have to check, actually from 2019, if you check from 2019, we are given the income tax expense, that is this amount here. and we are given the profit before tax as this. So how many percent is this of our profit before tax? Is it profit before tax or after tax? Profit before tax. Then you're supposed to take the percentage of that. So if your effective tax rate for 2019, then simply it means you do what? You start with an equal sign, and we'll take the value here, which is the value was minus. We don't want a minus value. You can say minus that amount, then divide by the profit before tax. You know the percentage of this, and okay, initially it will give you a number in your computer. It will give you 0.3. Then you convert it to percentage. Actually, that usually gives us the tax rate. The standard tax rate, 30%, which if you copy this formula across, it will give you 30% across the screen. So it will show this one you take from 2020. This one here takes from 2021. And this one takes from 2022. So that is the next part. Part number 2. So that is question A. They're supposed to compute each question at a time. Okay, we do that question here. So it's always important to indicate your solution. I don't think it will be better if you do your solution, although because our solution will be a bit lengthy, then this one you can actually do it here, but you have to indicate the question you are solving. That is, you have to indicate here that whatever you are solving is question A. Question A. Maybe you write there, we are solving question A. Question A. Solving question A. And question A has those 3 solutions, as we have seen there. The 3 solutions you have seen there. Now, question B can start maybe probably a solution for question B, which will require us to have a lot of working before we start solving the question. I would prefer we have this working here. We can write here. Where was question A? Okay, it was above there. Then we can have question B starting from here. Just type there, question B. Again, we are going to solve for this question B here. And the first thing you need to indicate is some rates that you're supposed to compute before we solve that question B. So you want to leave it in a position where you go and now compute the answer, and then you send that answer. After computing the answer, you say it is always important to send your answers to check and check through. So let's read question 2. Now you're told assume following now we assume that the following happened in this. We are told the revenue growth rate are forecast under 3 scenarios. That is, we have the 3 scenarios, the base, optimistic, and the pessimistic case, which according to my working, I'm going to set those values here. And the best way is actually to copy that data, the entire data, and check for the base. So it's important you can write here base, so that this is the base case or case scenario. So it is important to set that. Then for the years from 2022 now, We are actually focusing 5 years time. That is 5. Yeah, it will go up to 2027. So you do the same for the next case. We've said optimistic case. So optimistic, sorry. So again, you indicate there that the case you are solving here is optimistic. Then you perform that. Then finally, you're going to run the last case, that is pessimistic case. And here, you said that last case, pessimistic. So we have those 3 cases. That is the cases you are supposed to focus on. And by doing that, then you'll be able to forecast, because whatever you are told here is to prepare a 5 years financial forecast statement for this particular company from the year 2023. Notice is the year 2023 to the year 2027. So of course you have to give the base year, so that base of argument you start from our base year. So that is the first thing you're supposed to set. Actually, if you do this and type elapses up to there, I believe that the examiner will see that you almost got the concept, that the only thing that was remaining is actually to compute your work. So before you achieve this, these 3 is actually 6 items need to be evaluated based on every scenario. And the first scenario is where we were, and the revenue growth rate and focus of these 3, the base case, or the base case growth rate for the year, for the first year. Remember, the first year is which year? Prepare these sales from 2023. That is the first year. The first year is 2023. So then for the first year focus is the year 2022. Is for the year 2022 cumulative average growth rate. That is 21% that we got above there. So for 2023, you're supposed to use 21% because is the growth rate. And since you are, that is for base, remember, that is for the base, the base case. So you can even now compute for that. That is 121% of this, and it will give us the amount we have seen here. That is for 2023. But the question is not over. We are told this is expected to reduce by 2% annually until the last year of the forecast, subject to minimum of 15. So here means that it will reduce from 21, it reduces by 2, by 2, by 2. And at the time it reaches 15, it will not reduce again. That will be the minimum. So that is for the base case. So it simply means you're supposed to compute this one by reducing the amount. 21% you reduce by 2, it will give you 19. So for this one, you'll compute by 19% of what? Of 2023 to give you that percent. Then again, you compute again 2021, 19 now less 2 to give you 17%. So now 17% of this. And this one will give you 15% if you less from 17, you less 2. And now since it has reached 15% 2026, then it will not reduce again. You now proceed with 15% for 2027, and you get that amount for that. Yes, so that is the sales for the first computation. Then you're supposed, because in our scenario, we are not given the cost of sales. And how will you, so the first value, that is the first argument, Roman 1, we have done for base case. But we are also told about the two other cases, optimistic case and pessimistic case. Where you are told for optimistic case is 20% above the base case for revenue. If this is the base case, then pessimistic case will be 20% above this. So that simply means 20% above this. You can do it in two ways. Either you take this value plus 20% of it, which will give you this amount, or you can compute it with another way. You can say equals to 20% of the amount for 2023 here. Oh, sorry, you have to start with an equal sign. Oh, I've already started the equal sign. Then multiply by the value of 2023. Notice that it will give you the same answer. And you can use the same formulas to compute that. And it should be the same throughout, because we are not told that it is reducing. This one is actually constant throughout, and you get all the three values. That is for optimistic. Then for pessimistic, we are told again there in our question that while pessimistic case is 10% below the base, 10% below the base in all the forecast period, that is for all years. So being 10% below, it means we are going now to use 90%. That is pessimistic. Okay, this one, remove this. Supposed to use now 90. So you can say equals to, why we're using 90%. You take 100 minus, so you take 90% of what? 90% of the base. The base was here. And it will give us that specific amount. From here, you copy across to get the sales for that. So that is how you're supposed to compute. And now you go computing each and every item across as you compute this. Now, because in our question here, the next argument was the gross profit margin for the year of the forecast in 3 years average. That is the gross profit margin for the year of the forecast is the 3 years average for the period from 2020 to the year 2022. So that is the gross profit margin. So here you're supposed to compute the gross profit margin. You know how to get the gross profit margin. So we use the formula for this. So first you need to compute the gross profit margin somewhere. For 2020, how do you get the gross profit margin? So you're supposed to take what the values already given in our worksheet. That is, you can take the values that are given in this worksheet for 2020. You will have this gross profit over sales. Then multiply by 100. This one gives you the margin. So once you get that margin, so here we've got the margin of how? you got the margin of 50%. And you're told that for 2020, the gross margin was 50%. If you copy the formula across, it gives you the gross profit margin for 2021 and 2022. But they are asking us to use what? The gross profit margin for the first year of the forecast is 3 years average. 3 years average for the period 2020 up to 2022. So you're going to get the average gross profit margin for those 3 years. So the average gross profit margin, that means you get the average of the 3 margins we computed here, and you give us the 3 margins, and you get 57%. Now that 57% is what you're supposed to use as the gross profit margin of the first year, where the first year we said is the year 2023. So that means for 2023, you're going to get the gross, the rate, that is the gross profit margin growth rate, which is supposed to increase by 57%, which you are told that this is expected to reduce by 2% annually until the last year of the forecast to a minimum of 50%. So the first one will be 57, not affected. So we can say this amount plus it's the growth rate, which is 57%, or you can say 157% of this, which will give you this amount. But for 2024, it's supposed to reduce by 2%. That means now you use 55%. Then for 2025, it reduces again by 2%, you get 53%. Then for 2026, it will reduce again to 51%. That now becomes the end, because you're told it should go the lowest, 50%. So you cannot reduce 51 by 2 again, because it will go below 50%. That means the last one, you use 50% to get for 2027. So with that, then you can compute the cost of sales. And here the formula will be very easy. To just take the cost of sales, and then we copy that formula across. We copy that formula across the screen to get the other values. So you proceed again to operating expenses of what you need to get the formula of getting these operating expenses, which you have those formulas. For operating expenses, you take the total expenses minus the interest expenses over sales. So that is in this computation we had here, you proceed. You type there operating expenses. It's always better to show you are working. Operating, we're calling it operating expense ratio. Now, this ratio is what you're supposed to compute there. If possible, you can even indicate the formula you have used to compute that. So, just like we have done with others, then you indicate the years. You take those 3 years and then copy across here. Then you're supposed to compute each. So what do you get here? You are told that for operating expenses are models in as 3 years average. 3 years average for the period 2020-2021. These are assumed to remain constant. However, for 2023, use the average of those ratios. So how do you get that? Again, he said you have to use the formula. Here you say, you just pick the value of interest. So the interest that is operating like that. So the interest expense, because I told you take what minus what? You take the total expenses minus interest. So the total expenses and it was minus. So it is minus. So it should give us minus interest expense. Interest expenses, operating expenses. You take what minus what? Suppose so. This is minus. So you start with this. Just a minute. What is my formula? Can reduce this a bit. So we'll say is equal to. We start with operating expenses. And you need it to be a positive value. Minus this. Then that one in bracket. Then we divide by what? Divide by sales. So what will you get? Then you convert it to percentage, we will get 29%. Then again, you have to compute for the 3 years across the screen. You get the average of this. And once you get the average, you can even indicate here. Average operating expenses. You know how to write it. Then you now compute the average of the 3. You just say average. So in exam, don't use those shortcuts, just write the full name. And whatever you get here, it will give you what you're supposed to use to compute. Remember, we started with the base for 2023. So from there, you can actually compute this as percentage. That is 31%. So you can say 131%. 131% of 131% of the 2022 value. Then from there, we are told that it's supposed to remain constant. So meaning that you can copy it across the screen and you compute all the others. So you proceed that way for base, and again you do for optimistic and pessimistic. And once you finish that, you have already prepared that 5 years forecast statement of this company from 2023 up to 2027. So you're going to compute. Remember that you should always show your working against your forecast statement, so that you'll be referring to those numbers as you do your working here. So we are going to finish up that. So we have 2 assignments so far. One assignment is to run the solvers, the 2 exercises. I'll send you this copy and you'll go and now read it for yourself. Then again, I'll give you that worksheet that is not yet computed. so that you can attempt example 2 and 3. Then you send those workings on WhatsApp. So someone who is asking if they say, how are we supposed to know whether they mean compounded? Now that question is already answered in your question. There's nowhere they said compounded. They talked of cumulative, not compounded. So, you have to remember that those are two different things. So talk of compounded. Compounded is actually done of you do the interest of 1 year, then you compound it the next year, you take again for the next year, and you proceed compounding for 4 years. But now here you're taking just the first year, the last year. That is compounded. For cumulative, you are taking all of them, the average of all of them. So that is the difference between those two. So if you just go and do that question, and please, before you ask for the videos, make sure you have done this question and you have sent this in the WhatsApp. So you do the question and send it in WhatsApp. So the videos for tax, I will follow up that, and once they are ready, then they will be sent to you. It will be sent to you through a link. Yeah, then you'll get it there. So today we are going to stop there. Our next class, we are remaining in very few classes, of course. The next class we will not come to maybe check about, we're going to do more questions. And there are those questions that you did through, that is the cards. There are those questions that were sent, the cards. I don't know whether you attempted them. So you need to check those questions again. Then make sure that you can now go through all the questions in the 2 past papers. That is the practical questions. That is, take time, attempt every question. You can time yourself because there are how many questions? 3 plus 5 questions. That is 8 questions. Yeah, you can do the first 3 questions, then the other question. That is, you can divide those questions into 2 sessions, then you do all of them. So just run your workings and perform those questions for all of them. At least you can repeat them, that is yourself, without having to confirm the workings. Remember, you don't go reading those. You need to attempt them. Get an empty worksheet and then try to run them again. So for those like 3 remaining lessons, this is 3? No, just like 2 lessons remaining. We are going to repeat some questions there that I feel we need to repeat again. And again, we are going to formulate more questions and send it to you. So about the makeup, we'll get a makeup. Probably you have to get 1 makeup. I'll tell you, probably Monday or Tuesday, it will be communicated to you in advance. So that is in case you have a makeup on Monday. Probably on Monday is when but for us to have a makeup, it is the day when we don't have any other class that is running online. So which sometimes become a bit tricky, but I'll tell you when you can borrow 1 class and then we do our makeup there. So up to our next lesson, I wish you well, have a good night. The other class. Please do the assignment and send them in the WhatsApp.